So the next important concept in company law unit 1 is lifting of a corporate will. So what is this corporate will? Basic principle. So the corporate will basic principle was decided in Solomon versus Solomon and Co. Limited. So what it states is, in questions of property and capacity of acts done and rights acquired or liabilities assumed. So in these questions for the property, capacity of the acts, rights acquired and the liabilities of the company, the personalities of natural persons who are company's corporators is to be ignored. So the members of the company cannot be held responsible for any act of the company. They are hidden behind a curtain, they are protected behind a curtain, and if anyone wants to sue, then he has to sue the company only. The members cannot be held responsible. So this is a corporate will. Lee versus case law, Lee versus Lee's Air Farming Limited. So in this case, this person Lee, he incorporated a company and started he himself acted as an employee in that company. So after his death, wife claimed compensation under Workmen's Compensation Act and the compensation was granted, even though he was the owner of the company and working as an employee. So when this corporate will can be lifted, so when the persons or the members in the company can be directly held responsible. So there are two major grounds: judicial grounds and statutory grounds. First, judicial grounds. Determination of the character. To check whether the member is an enemy of the company, the corporate will can be lifted. The next is for benefit of revenue. If any person starts a company for tax evasion, solely for the purpose of tax evasion, then the court can lift the corporate will and directly hold the member responsible. The next is fraud or improper conduct. That is, if anyone starts a company for illegal purpose, then also the corporate will can be lifted. Next is invocation of the principal and agent. So if the principal and the agent are involved in a wrongful activity, then also the corporate will can be lifted. Against public policy, if the company is created against the public policy, then also the corporate will can be lifted and the members can be directly held responsible. Case law. State of Karnataka versus Selvi Jayalalitha. So corporate will may be lifted if the corporate entity is a mere cloak or sham used to misdirect shareholders and authorities. So if the company is a total fraud, a sham, and then corporate will can be lifted. The next are statutory grounds. So what are the statutory grounds to lift the corporate will? Non-compliance of requirements of incorporation under section 464 of 2013 Act. So under section 464 of the 2013 Act, requirements of incorporation are given and non-compliance of that leads to lifting the corporate will. So the next is misdescription of a name under section 12. So not if the name is not in accordance with section 12 of the 2013 Companies Act, then also the corporate will can be lifted. Fraudulent conduct of business. So under section 339 of the 2013 Act, if anyone is involved in a fraudulent activity, then he will be personally held liable. So the corporate will can be lifted. Holding and subsidiary companies. So if the company holds a subsidiary companies, then also the corporate will can be lifted. Then misstatement in the company's prospectus as per section 26. So if in the prospectus, if they misrepresent, then also the corporate will can be lifted and the members will be held responsible. Reduction of membership below the prescribed limit. So for a public company, we have the limitation of 7 members at least. So if the number goes below 7, then the corporate will can be lifted. No refund as to money of application. So they have created shares, but the allotment of shares fails and they do not refund the money, then also the corporate will can be lifted. For investigation of company's ownership, to find out who is the owner of the company, then at that time also the corporate will can be lifted. Fraudulently inducing persons to invest money in the company. So if they invite people to introduce money into the company through fraud, then also the corporate will can be lifted. So this is a lifting of a corporate will. We saw the basic principle and the grounds on which the corporate will can be lifted, judicial grounds and statutory grounds. The next concept is promoters' duties and liabilities. So who are promoters? Definition is under section 2 clause 69. So promoter means a person, any person named in prospectus or identified by company in annual return under section 92. So he should be named under prospectus as a promoter or identified in a company annual return under section 92. Has control over affairs of the company directly or indirectly as a shareholder, director or otherwise. So he has a control over affairs of the company directly or indirectly. Then on whose advice, directions or instructions board of directors of company is accustomed to act. So on promoter's advice only the board of directors should act. So he is the promoter. The first is he is named in prospectus as promoter, then he controls the affair of the company, and on his advice only the board of directors act. The next are duties of a promoter. So what are the duties of a promoter? To disclose the secret profit. So if the promoter is making any secret profit through the company, then he has to disclose it. The next duty is to disclose all the material facts. So if he knows any material fact of the company, then he should disclose all of those. The promoter must make good to a company what he has obtained as a trustee. So whatever is obtained as a trustee through the company, he should give back to the company. Duty to disclose the private arrangement. So if he has made any private arrangement and acquired any secret profit, then he has to disclose that. Duty of promoter against the future allottees. So anyone who comes to the company, the future employees, then he should behave good to them. Liabilities of a promoter. So what are the liabilities of a promoter? Liability to account for profits. So if he is making any secret profit, then he has to personally take liability of that. Then personal liability for all contracts made by him. So any contract a promoter makes, then he is personally liable for it. Liability of misstatement in the prospectus. So if he makes any misstatement, if any misstatement in the prospectus is made, then the promoter is personally held liable. So these are the duties and liabilities of a promoter. Case law. Busher versus Richmond Land. Promoter is a person who brings about the incorporation and organization of a corporation. He brings together persons who become interested in enterprise, aids in procuring subscriptions, and sets in motion the machinery which leads to the formation itself. So the promoters are nothing but the owners of the company. So they are the ones who come together and start a company, and they have certain duties and liabilities. So this concludes the first unit. Thanks for watching.